Well, in this video, I'm scanning the market. Now, I've come to the screens late, playing 60-side in a 60-side football tournament last night, so got in late. Uh, Great game. We were 4-1 down the first half and won the game 5-4 by this, 4 goals in the second half. So I'm looking at cable here, and you can see we're correcting this bearish impulse. We're back above last week's lows that were scored on the Friday non-farm payrolls, and we managed to catch the bid yesterday and made some money on this. But we are looking for a correction, a continuation up. Daily ATR is about 120 odd pips. We've done about how many pips have we done? So we've done about 80 pips. So there's still more to come on the upside. Now, if we draw our Fibonacci, we can see for a 38.2, looking at 121.30, higher up 121.80. So if we stick those in for now, that'd be extreme. So 121.50 is a reasonable target to complete the ATR. Right, we go back onto the lower charts. So we had this down impulse, move up, break of structure. This trade here was a loss. We were actually trying to short it and then reversed, split the script, and we made money on Fed's Powell, but we were in the market way before that. We bought it down here. And we were signaling for higher to come, and that's what we've got. And this was presented in my analysis. You can follow me at FX Street, Ross J. Berland. This was analysis that was done yesterday. The ball's moving in on the bear's break of 120.90 structure. I drew out this schematic, talking about higher levels for the day ahead, talking about moving up to come back down later on. So it's all there if you want to read that, but that's essentially what I'm talking about here. The analysis was drawn at this point here along the somewhere here. I was talking about move up. That's what's played out. So pat the back, and we are now breaking more structure. We're above Monday's highs. So that's the initial balance for the week. And the bias is up. So looking to trade this, if we're going to, we want to be buying at the low of the day. So we're getting this bearish move down into the trend line, and we can just monitor it and see whether this is holding or whether it wants to come all the way into here. And you kind of got this inverse head and shoulders-ish pattern. Essentially more buying coming through than selling. At the bottom of this bearish impulse we talked about in the daily chart. So we're going to be looking for cues to go long that are put the Fibonacci's to the right, so we can make those bigger if we want to keep an eye on those. Even though I drew them in, I don't know where they went. There they are in there, put them in a different time scale. And okay, so that's cable. So in this we're looking for one drive one, two, we're looking for a 3-drive reversal. We just typed in 3-drive reversal. I had no idea what was going to come up, but the 3 drives pattern is a reversal pattern characterized by a series of higher highs or lower lows that complete at a 1271 frequency extension. So looking at that then, how to identify 3-drive patterns. So you draw your fib from the top to the bottom of the impulse correction, and in the next, the low of the subsequent drive needs to marry up with the what do they say here? 127 or 161. So like on this chart here, for instance, we've got our drive, the correction, drawing that fib, and we want to be coming in, so which we have. It's pretty irrelevant anyway. Just interesting to look at that. So that's what we're looking for. We're looking for 3 drives in. So we've got one, we've got a second. We're looking for a third push. And if we try and time it, so we're some way off, we want to be looking at the hourly rotation on this drive. Now on the calendar, we've got Feds Williams speaking in 40 minutes time. Could be a bit of a market mover. So we're just analyzing, going through our charts. This is on a watch list as a first green day. So as you can see, yesterday closed green after a number of red day closes. So this is an indicator, daily close markers, and it just tells you whether it closed bullish or bearish. So bearish close, lower lows on the close, or bullish on the close. So I use that as a gauge to assess the directional bias. So the directional bias, given that after a series of down days and a bullish close, the directional bias is a continuation into that length, into the shorts. So we're looking for a move up into in the money shorts, targeting areas of where positions will be orders and so forth, where being squeezed, weaker hands will come out of their position, they'll buy back their position, and that will potentially give us who are buying an opportunity to ride higher as those orders are executed and paring back on shorts and encouraging breakout buyers, pushing the price higher. So we'll come back to this chart at the end of this 15-minute candle and see how the land lies. Right, looking at dollar CAD then, we're on the backside of this trend. We had a break of structure over here. Yesterday closed first green day to the downside. We've subsequently moved lower. We've moved into a 50% retracement of that bullish move up. We're coming up. So the balls are coming up for some air. However, if we go to the daily charts, we are still biased bearish on this broadly drawn trendline resistance. So that one's drawn. Ideally, you want to connect as many as you can. The candles that they're touching along the way. I mean, that's a bit too fierce. In there somewhere, but you can see we're coming up into this resistance area. Now, what's happened here, you've got this W formation, and the bears have come right into that neckline area, and it's being supported. Now, it would be unlikely that this shoots higher on a one-day basis. Given that we've broken the structure on this candle, of this move up, the bias is to the downside for the day ahead. To fill in this wick that's being formed on the day. This could be regarded as a stop pump towards 20 above the $134 round number. We could be heading into 134.50s the day ahead. Target area to the downside. So if that thesis is correct, then we're breaking the 15-minute trend. Just flip back to cable just to eye what's happening there. So we're still looking at that 3 push pattern. We want another push lower and a move up. So the stop hunt. So we've got Mondays. Where is it? Pivot back to CAD. Waiting to see how this plays out on the 15-minute chart for a short to the downside. So we've got this break of structure, move up into shorts, stops above here. We've got the breakout traders and their stops and positions that are being taken out on the front side of the bear trend. So bias is to the downside. Now I have 25 minutes before William speaks. So the ATR is about 100 pips. We've still got about 40 odd pips to 60, 40, 50 pips, something like that to come down lower. Oh, what's happening now? So it's got 50 pips of ATR left on the 61.8 is a reasonable target. Lining over here with that high. So that's the target area. So this is a first red day trade. Moving over to dollar yen. So we're bearish up until this point here. So we've come out of this trend bearish. Now we've broken to the backside of this, what was a bear trend. And now we're actually flipping bullish. Pretty strong correction, in my view. Done a fast 38.2, 50-ish into support area. Now we did close as a first red day yesterday. Now in that case we're bias short all the while that we're below on the front side of the week's bear trend. If we get a break above that, then we're looking for longs. We've broken the head of the M formation, which is also a bullish factor. That M formation in there. Clear out of this high. Then we'd be looking at M formation being broken, a break of the resistance that would then likely turn to support on the break, and then a retest of could be something like that. On the other hand, given the red day bias, yesterday's, we could be coming lower, so this is a move up to come down. $31.50 resistance for a move lower, so we'll just put our bias on there. Need a break of this structure to sell. Daily ATR is about 170 pips. That brings us down into 129.50 target. Having said that, we've got low hanging fruit all the way into here. 71.8, so 129.10.